Welcome back to Money Exchange. Since he last joined us here on Money Exchange, the euro has fallen from 114 to 108. And if you'd taken his advice and shorted the euro along with us, you'd be sitting on one heck of a nice profit. The European Central Bank recently hinted it may increase its stimulus program in December. Will this add more selling pressure to the euro? Joining us from London is founding partner at EMFC, Thanos Papasavvas. Thanos, thanks for your time this morning. Great tip on the euro a few weeks back. You timed that one perfectly. Where is the euro headed in your view in the coming few weeks?
Good morning, Andrew. Thank you very much for having me here again. It's a pleasure to be here. I think that this is likely to continue, albeit not at the same speed. We saw the majority of the move. This move was where the market was wrong-footed in terms of the expectations for December and the easing of the ECB. I think that is already in the price, so there may be a little bit of adjustment positions, but the move is more or less over. In terms of this being as a potential trade, this is where I'd be looking to close the trade from the 114s. I think the euro could continue to go lower, but that would be only if the US starts to surprise on the upside in the new year in terms of further interest rate hikes, or the ECB is much more dovish than what they were. So we should be relatively stable where we are, maybe towards the 107s, retesting year lows over the next few weeks, but not significantly lower, like hitting parity. I don't believe that will happen this year.
What about looking ahead to next year? Obviously, there's an expectation of stimulus from the ECB. Next year, there's a lot of institutions and banks talking about, 103, maybe parity. Is with the US Fed highly likely to raise rates by the first or second quarter next year, is that then a possibility, say mid next year, to see parity?
I believe that we will see parity if the Fed starts increasing the amount of the interest rate hikes, or if it starts doing it more frequently. In other words, if we were to see 50 basis points in Q1, 50 basis points in Q2, 50 basis points in Q3, then clearly the euro is going to reach parity and even break below that. But I doubt that the Fed is going to be moving as aggressively as that. It is going to take a very slow path. I think the end of the trajectory is much lower than it was in previous economic cycles. And as a result, I think the euro will move gradually towards parity. I don't still believe that it will necessarily break parity. I'm positive on the overall global environment, which should help the global economy, including the Eurozone, in 2016.
Thanos, did the market overreact yesterday to the Bank of England's decision? Because Mark Carney did say he wants the UK residents to get ready for high interest rates, but we saw the pound pull back quite sharply. Is this a buying opportunity, do you think? Because we are going to see rates higher by this time next year in the UK, I assume.
We are, I believe, in my view, when we last met, was that there won't be a rate hike from the UK until the second half of 2016. As I'm still very much of that view. There is no rush for the UK to increase interest rates. People thought that they may be following the Fed, very close to the Fed. I disagree with that, especially because the largest trading partner for the UK is the Eurozone. And the Eurozone right now is not such a great place to be trading with. So you do need a relatively competitive currency. So I believe that the exchange rate of the euro sterling is very much in the back of Mark Carney's mind. And as a result, there won't be a rush into changing interest rate. Also, there's hardly any inflationary pressures coming through. So I think the market was wrong-footed. I think that the sterling versus the dollar will continue to weaken marginally down towards the sort of 150. If it gets anywhere like the mid-140s, it's going to be a buying opportunity for the pound, in my view.
I don't think when we had you on the program last time we talked about the Bank of Japan. There's a lot of speculation there about more stimulus from Kuroda. Are we likely to see some more money printing activity at the Bank of Japan in the first or second quarter of next year?
I think so. I think the whole project of the three arrows has not gone as well as they would have liked. Clearly, we are seeing some improvements in terms of where inflation is versus where it was a couple of years ago, but there's still a lot of things to be done in Japan, and I think they will try to implement some more strategy on that. We've seen the impact on dollar yen moving now firmly above the 120 level, and I believe that that could move towards the 125 over the next month or so as the Fed starts increasing interest rates and the further stimulus comes in from Japan. So I'm positive on the dollar versus the yen. I see further weakness in the Japanese yen on the back of that.
Thanos, you've been around the currency markets for a few decades now. You're now a founding partner at EMFC. Tell us a little bit about what EMFC is and what's your role within the business.
Of course. EMFC was set up in 2010. What we do is we help companies raise loans. So we help loan execution support. We work for the CEOs and the CFOs of those companies to help them raise finance. So it's very much of interest to those CEOs and CFOs what's happening in the macro global economic environment, what is happening within the FX rates. A lot of the countries we deal with, such as Sub-Saharan Africa, Nigeria, Ghana, Kenya, Egypt, even the Nordics, however, are very much in tune to the FX rates and what's likely to happen on interest rates locally, US, but also global environment. With China, is China going to slow down? So that's what we do. We help companies raise loan finance. We also give them a view of what's happening internationally in terms of FX and interest rates.
Thanos, it's always a pleasure to have you on the program. Thanks so much for getting up early this morning and joining us.
Thank you.
Stay with us because after the break, Mal and I will recap what the major central bankers have been saying this past week, and is there any reason to adjust our expectations of what direction currencies are likely going?